Hello everyone, I'll be talking about the ICT Market Maker buy model in this video. We'll first discuss the basics and then I'll dive into some gems a little bit later in the video. Now the basics of a ICT Market Maker buy model is that there's an original consolidation where price is just consolidating back and forth, then it leaves that consolidation. It reaches a point where you can anticipate a reversal. This is the smart money reversal where price reverses from the sell side of the curve to the buy side of the curve. And then on the buy side of the curve, all price is doing is targeting these old highs. So it moves from consolidation to the sell side of the curve. It reaches a smart money reversal point where price reverses at, and then it reaches the buy side of the curve and it targets these old highs from the sell side of the curve. So it's pretty simple. Now, when you look at a lower time frame chart, it may look like this. This is kind of the inner works of that model. And then if you look at a higher time frame, it may just look like this, where price creates a high, pulls back down, creates a low, and then it creates a higher high. Anytime you see a high, a low, then a higher high, this is a lower time frame market maker model. Because let's say that this is a 5-minute chart. Well, on the seconds time frame, it created a consolidation, it moved away from that consolidation, and there's a lower time frame market maker buy model in here. So to identify these original consolidations, to make it as simple as possible, which no one does, no one says this for some reason, all you have to do is identify the high where it started that retracement back to the downside. So I'm identifying where price reversed and created that retracement. Then I'll have a better understanding of where to target for the original consolidation. Now, if we dive into another example over here, actually, this is the one that we just took a look at, but you see this high is the high that started the retracement lower. So if we look over here, that would be this high. So I'll put the little eyeball here and we'll compare these two highs. So we have this high and then we have this high. So let's say that this is a 5-minute time frame and then this is a 1-hour time frame. So all we're looking for is that high that started that retracement lower. At the smart money reversal level, excuse me, at the smart money reversal level, what we can look for is we can look for an SMT divergence. Now, an SMT divergence, it's very simple. All I'm looking for is between ES, YM, and NQ. And for those who don't know what YM is, it's the Dow Jones. Between those three assets, they are correlated assets. I'm looking for a crack in correlation at this smart money reversal level. Meaning, if I show an example of what that would look like, at the low, I'm looking for one to create a lower low. And then I'm looking for one to not create a lower low. Okay. So between these three assets, I'm looking for at least one of them to crack that correlation. Sometimes it can look like this. Make this a little thicker for you guys to see it. Sometimes it can look like this, where price creates a lower low, higher low, and then lower low. This is what I hunt for at that key reversal point where it moves from sell to buy program. It may not look like this. It may have a higher low on two assets, right? So we have higher low here, lower low. Okay, these two assets are going to move faster to the upside. Okay, so at that smart money reversal level, we're looking for SMT. Once we get that, it can start targeting these highs. Okay, now a big misconception about market maker models is as soon as people see these market maker models and they identify a consolidation in here, they immediately think it has to go for this high. Okay, and I'm going to kind of help you guys filter out situations where it moves to this external high versus price just moving to something like this. Because if you've traded this long enough, you know that it'll do something like this, where it looks like it's in a market maker model. It'll reach for a high, maybe right in here, and then you'll see it reverse back down lower. So I'm going to show you guys kind of a gem, which not every time this is going to work, and sometimes you're going to miss out on opportunities, but more times than not, this will save you. If I do have a higher time frame bias, this is a perfect example. This is a textbook setup of when I anticipate for this high of the retracement to get hit. Now, why is that? Okay, so if you didn't watch the ICT video course that I have in the Discord, I have a 7-day course in there, which most of you guys already know, and I teach change in state delivery. You must know that in order to understand this. At the smart money reversal level, we can anticipate for price to create a change in the state delivery where it's breaking over consecutive down close candles, creating a bullish fair value gap. If I see that, a key level, it's going to indicate to me that price is likely to target buy side liquidity. So let's say that this time frame that we're looking at is an hourly chart. On the lower time frame, this is what a market maker buy model would look like. So if we're just viewing this on a 1 hour time frame, it would just look like this. Okay, if we're looking at this on a 1 hour, it would just be high, low, higher, high. That's going to be a lower time frame market maker buy model. Okay. On this 5-minute time frame, since I already have the bias that price is going to head up to here, since this is the draw on liquidity, okay, when I see a retracement on the 1 hour time frame, I can hunt for a smart money reversal in that retracement because it's in the directional bias of that 1 hour time frame. If the 1 hour is going to head up to here, I am trying to catch the bottom of a retracement. Not even catch the bottom. I'm just trying to identify where a smart money reversal occurs. So you don't have to just catch the bottom of this smart money reversal. In fact, I don't think that's a good idea at all, especially if you're new. What you can wait for, though, is an SMT to occur, another change in the state delivery to occur, and once you get that change in the state delivery with a fair value gap in alignment with where the higher time frame is going, and this doesn't have to be a 1 hour, it could be a 15-minute, sometimes it could even be a 5-minute, but I recommend at least a 15-minute for your higher time frame bias. In this situation where price is doing a retrace on the 1 hour, remember, it's moving from high to low to higher high. So on the 1 hour, we have high, low, higher high. But price is already heading up to here. So when we get this SMT in the retracement and then price creates this change in the state delivery, what's likely to occur is it's likely to hit that consolidation high. So in this scenario, I would be targeting this original consolidation because it's likely to still move past that. On the 1 hour, if I'm anticipating for price to move up to here, then price is just going to move from high to low to higher high. And in that scenario, it will hit this original consolidation and then potentially move past it. So in that scenario, again, I would be entering on this change in state delivery retracement, stop loss at the low, and I'm going to be targeting this high. Now, sometimes what happens, and again, like I said before, if you've traded this model before, you know this already, price will just take out this first high and you'll be anticipating for this 5-minute market maker buy model, original consolidation. You'll be holding for that high, but it just takes out the first high and then reverses. So I'm going to show you guys a way to filter out those setups. And yes, sometimes it will just run for this high right here and you'll miss out. But again, you'll save yourself more times than not. So here's an example of what that looks like. You have the original consolidation. Again, on the higher time frame, let's say that this is a just high, low, and you're anticipating for it to make a higher high, but there's no 1 hour bias to suggest that price would head up to this high up here. Okay, if there is no higher time frame bias to suggest that price would move higher, like in this previous example we have over here, we were anticipating for price to move up to this, let's say 8340 level. Since I was anticipating that, it's likely to hit the original consolidation. If we look in this example, let's say I have 0 higher time frame bias. Well, when price creates this SMT at the smart money reversal level, let's say it creates a change in state delivery in here. Okay, price can just move to the first high in here. Okay, and this is where you want to target, because on the lower time frame, what price is doing is it's creating another market maker model. So a lot of people don't know this, but if there is a high and then a low and then price creates another higher high, it's a lower time frame market maker buy model. So if we were to look at this from that view, okay, this is what it would look like. So here's your smart money reversal down here, and then price moves to the buy side of the curve, and there is likely 2 legs of accumulation in here along the way, and then it targets this high. So if you do not have a higher time frame bias, let's say no higher time frame bias in this example, so we can remove this line, and all you see is price create a high, then a low on the higher time frame, don't be targeting this high up here created, because there's no higher time frame bias to suggest that price can move past that. But when you do get SMT in here, okay, and price creates a change in the state delivery, what can happen is this first high, which will likely be in a premium if you draw it from this high up here down to this low, it can target that first high in a premium, and also it could target a fair value gap in here. So in a situation like that, I'm just going to be targeting this first high. Okay, so there's 2 different types of models that we're looking at here. When we have a higher time frame bias that price is going to head up to here, then the high of the original consolidation can get hit. Remember, on the higher time frame, this is high, low, higher high. I anticipate this to get hit when I have a higher time frame bias. When I don't have a higher time frame bias, but it's still, let's say it still hits sell side liquidity somewhere in here. So let's say it still hits sell stops, creates SMT at a key level, and then it creates a change in the state delivery and it's looking bullish. I'll just target this first high in here and then potentially a fair value gap in a premium. Don't be aiming for all the way up here, aiming for the highest target when there's no higher time frame bias indicating for price to head past that. So that gem alone will save you guys a lot of losses, because it has saved me a lot of losses. Here's an example of what I'm talking about. So on the 4-hour chart this week, if you've been keeping up with the content, this was my higher time frame bias drawn liquidity. Once that hit, I did not have a higher time frame bias anymore. Okay. On the 15-minute time frame, between this low to this low, and then between this low to this low, notice how on ES in the top left and Dow in the bottom left, it created a higher low. Notice how on the right side, on NASDAQ, it created a lower low. Notice how it took out sell side liquidity. Okay, so we're in a discount because beneath sell side liquidity is a discount. It took out sell side on Dow here as well. And then also it took out sell side on NASDAQ. So since price has moved from this external range liquidity down to sell side liquidity over here, and it's created SMT, it's already taken out the sell stops, I'm going to be looking at the lower time frame and seeing if there is any models in here. Now, since we do get a CISD, or a change in state delivery, which occurs right here, it's likely to still move from sell to buy program and target buy stops. If you look at the video that I posted on Twitter, I did share my execution for this on Friday the 16th, 2024. I was anticipating for this high to get hit, but I was just aiming for these highs as well. Now, if we take a look at this previous example over here, okay, when I don't have a higher time frame bias to suggest that price can head all the way above that high, but I still see a market maker buy model, where am I going to be targeting? I'm going to be targeting that first level of buy side, which can also line up with a premium market. Moving back to this example. Okay, if you notice, I just got out at this first high because it's Friday and I just wanted to take profit. But if we look at a 15-minute time frame, where did I target on Friday in that video? If you go on my Twitter and look at the video that I posted on Friday, February 16th, I'm anticipating for price to take out this high. I'm not anticipating for it to take out this one. Later in the day, I did think it looked like it could, but that ended up being the wrong idea. But I didn't see any lower time frame model in there. But my initial idea here is that we just reprice back to here. Why? Because price took out sell stops, it created SMT, and it created a 1-minute change in the state delivery. So it's likely to attack buy stops. It does not have to reach all the way up into here because I don't have any higher time frame bias for it to suggest that price would head here, at least yet. I didn't look at my higher time frame bias, so there's no need for me to anticipate that it would take out that external high. Okay, so I'm just targeting this initial high. If you were holding for this high all day long, you ended up getting stopped out. But since I didn't have any higher time frame bias to suggest that price would head up to here, I'm aiming for the first high, which is right over here. Now, this is a lower time frame market maker buy model. High, low, higher high. Look at a 1-minute time frame. High, low, higher high. So people think that it must hit here because that's the original consolidation high, failing to realize this is a market maker buy model in and of itself because it created a high, low, higher high in this fractal of price action. Let me blow this one up real quick to make it easier to see. In this fractal of price action, okay, original consolidation, sell side of the curve. Let me delete this. Original consolidation, sell side of the curve, buy side of the curve, smart money reversal. I'm hunting for the change in the state delivery and an SMT at the smart money reversal, and I'm targeting the easiest high. Why this high? Because this high is where price reversed that and started the retracement lower for the sell side of the curve until it moved on to the buy side of the curve. So I'm aiming for this high. A higher time frame market maker buy model would suggest that it needs to take out this. Okay, but again, I'm not aiming for that external high all the way up here because I have no higher time frame bias to suggest that price would head above this level and reach for a level above that high. When I do have a bias that price would do that and reach for a level above this high, and let's say my hourly bias is bullish, I would target the original consolidation high. So I hope that helps filter out a lot of setups for you guys. I definitely recommend watching this video a couple times, just taking notes and then going into your own charts and studying, because I do believe it will be eye-opening for those really willing to study it. Hopefully you guys enjoyed, and I will see you guys tomorrow.